Good morning and happy Monday. Welcome to Stock Market Today. This is Dan Russo, the Chief Market Strategist at Chaikin Analytics. Hope everybody had a great weekend. Let's get right back into it. Just a quick few things first. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show. We also give you daily stock ideas to consider upon further research, and that hits your inbox every trading day before the market opens. So U.S. equities finished higher on Friday as the S&P 500 registered another week of solid gains. However, the NASDAQ declined for the week with growth stocks trailing value by about 6% week over week. Energy was the standout. Industrials and materials were also ahead of the broader tape. Tech, comm services, consumer discretionary trailed on Friday with the FANGs mostly underperforming. Treasuries were little changed. Dollar was weaker on the major crosses. Gold was up 70 bips, though it did close lower on the week. WTI crude down 2.4% on Friday, but had a massive gain for the week. On the day, energy, REITs, industrials outperformed. Tech, Utes, comm services lag the tape, as we said. Now, as we get to the desk this morning, some follow through to the upside. U.S. futures up 80 basis points. That's on the heels of Asian markets trading higher overnight with Japan. Remember, we started talking about that 29-year high in Japan. Well, they'll follow through here on a Monday, up over 2%. China, we've talked about China a lot in our notes, the A shares and some of what's happening over there. China gained more than 1% overnight. European equities are seeing some solid gains. Interesting, if you look at VGK, the ETF that looks at Europe, it's broken a 2-year downtrend line. So treasuries are bid. Curve is flattening. Dollar slightly weaker versus the yen and euro. Gold up 30 basis points, and crude is up 2% to get us started on a Monday morning. Let's look at the major markets across the board. I'm starting to ask the question, and I think you should be too. Are we closer to the beginning of a cyclical bull than the end? I think the case can be made that we are. Take a look at the small caps. Small caps IWM took out the 2018 highs. Now, I don't have it here on this chart. I'm keeping things tight. But zoom out, get a 5-year chart of IWM. We'll look later on in the show, actually. And you can see a break through the 2018 highs, right? So they went nowhere for 2 years, and now they're breaking out. We have SPY breaking above the September highs here. So in terms of near-term breakouts, we have 2 out of 3 ain't bad. SPY and IWM breaking out above 2020 highs. Waiting on you, Qs. Waiting on you. Maybe the rotation is a little too much for you to handle right now. Over the weekend, I wrote about how investors, and I've been talking about it here too. I mean, this is not a new view. I've been talking for months now about the rotation. I mean, everybody else is just kind of catching on at this point. We started highlighting materials in June. We started highlighting industrials back in August. More recently started highlighting the banks and the financials, right? So the fact that everybody else is catching on to this should not be a surprise to you all who have been following me, either reading my work, watching this show, et cetera. We've been all over the theme for a while. I think it's a positive sign for breadth and participation, but the set it and forget it, own growth trade that's been easy is probably over. So let's be realistic there. Just kind of diving into growth stocks and watching them rip. I think that could be that's going to be a harder trade now going forward. Let's hit our market in a minute. Stocks rally as investors begin to discount a world with a vaccine, and I think that's what's happening. I think that the pessimism, I think the case can be made that COVID was actually a capitulation bottom, and we've been climbing a wall of worry ever since. And now we're breaking out. Small caps break above the 2018 highs. Maybe I'm wrong, but you know what? That's my thesis right now. And until I'm proven wrong, I'm not going to change it. Treasuries remain under pressure, sending rates higher. Dollar and gold continue to consolidate their recent ranges, and futures point to a higher open here today. Now, if we look at the power bars for the major averages or indices, the Dow tax on 1.4% yesterday, 2-0, bulls to bears there. S&P up a like amount. 135 to 45 bulls to bears there. NASDAQ, your underperformer. It's been the NASDAQ lagging. 16 to 13 bulls to bears there. And the small caps have picked up the baton and run with it. 806 to 203 bulls to bears on the small caps. which added over 2% on Friday. Bonds down ticked in one of your more beaten down areas of the market. Energy was leadership. And I have to be honest, I'm watching for signs of a basing process in energy now, right? And so now you see the progression, right? We saw the materials start to outperform, then the industrials. Now we're starting to see the financials base with the banks beginning to turn higher on an absolute and relative basis. The next cyclical shoe to drop or lift, if you will, would be energy, right? And they were up 3.6%. I'm not saying it's there yet, but if you're not paying attention to it, I think you're doing yourself a disservice. I've been reading voraciously about what's going on in the energy complex and trying to get a handle on it for myself to be ready in case the opportunity presents itself. According to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. Major indexes are mixed. It's our stock of the day. Now, like I said, I think the growth, set it and forget it, growth trade is the easy trade is gone, but there's still opportunities. This is not to say that we don't want to continue to focus on growth. We just want to focus on other areas of the market as well. So I like Pinterest here. Pinterest is interesting. PINs. Full disclosure, I own it personally, and I own it from much lower prices than here. It is bullish, strong trend, strong industry group. It's oversold. It's outperforming. Only knock I have on it here is that it has bearish money flow in the near term. It's kind of interesting. Number one, I own it. Last week, I listened to a presentation or watched a presentation given by Mark Chaikin, where he called out Pinterest as a name that he liked as a potential bullish idea. And then in my work over the weekend, I was running some screens, and Pinterest hit one of the screens that I like to use. So taking that as an opportunity to highlight the stock, highlighting it in my note, highlighting it here for you today. Nice little consolidation within the context of an uptrend, oversold. I think the weight of the evidence supports Pinterest going higher. And this is what I'm talking about. You're going to have to be selective now within the growth theme, I think. There are probably a lot of stocks that have lifted with the theme and that are probably just not very good businesses, right? And so I think it's going to make sense to kind of go through and figure out what's good, what's bad, who hyped a big story to watch their stock go higher when in actuality they're bad businesses. Like that's, I think we're going to get to this stage where investors start to do that, right? A lot of hope, a lot of hype, a lot of big prices. Now the smart money, I think, is going to start slicing and dicing these companies. So far, Pinterest looks interesting to me. So we want to highlight it here, but as always, manage risk. Let's take a look at our sector tracker now. Movement of the last 5 days for the major sectors. I mean, the top three should tell you your story, right? Cyclical / value, rotation. Energy, fins, industrials at the top of the list. REITs popping here a little bit on the reopening on the vaccine. Staples, utilities, healthcare, middle of the road. Materials, the other part of the rotation trade, the other cyclical value area. We've talked ad nauseum about it. You should be well positioned at this point. I mean, if materials should not be a new idea for longtime viewers of this show. Comms, discretionary tech, bottom of the list. That's your offensive. That's your kind of growth trade. So the rotation is there. It's real. It's playing out. It's not to say we flip a switch. Now, we've said this a bunch of times. I'll continue to say it. You don't just sell all your growth and buy value, right? Like that would be silly. That's an all in, all out bet. That makes no sense, right? Pay attention to the relative strength, pay attention to the rotation and watch it play out. I mean, I'm trying to highlight it as best I can in real time. But, hopefully those of you who've listened to me for a long time haven't learned a lot and are applying this on your own, right? Not just waiting for the 8:45 show to come on to be told what to do. Give a man a fish, teach a man a fish is kind of how I look at it. Our industry in focus, pharma services. It's kind of interesting because the power bar is gross, 8 bears to 1 bull. It's been a massive underperformer for the past 6 months, lagging the S&P by 11%. It's 21 out of 21 subsectors, a bunch of bearish names here that we don't want to touch, like Axum, Zogenis, and Arvinas, all with very bearish ratings. But then I look at the fund and it's kind of knocking on the door of a breakout. XPH. Now, there could be some nuance here, but knocking on the door of a breakout, or actually getting out, maybe. Neutral, strong trend, mixed money flow, overbought, personality change. It's kind of interesting. There's a lot going on here, right? And I think that this is what happens when you see rotations. People are squaring up positions. So you start to see these areas of the market that had been big laggards that have charts that look like this. And, it's fine. It's just going up. It's going up with the market. It's just not going up with the same level of intensity. So it's kind of interesting. We'll continue to watch, but I'm not excited. Let's look at the trending names now. Winner side of the board, really two things in common. MGM, HST, and SPG are your reopening, your vaccine trade. MGM also had some numbers coming out of New Jersey that looked better. MPC, Valero, we told you oil was up 3.5%. I'm not going to belabor the point here. Loser side of the board, not a ton of news either. Sinfin down 5%. Market Access, Etsy, IPG, these are growth stocks. NVIDIA, Amazon out saying that they're going to begin to use their own chips in Alexa and shift away from some of the chips that they were buying from NVIDIA. So NVIDIA under pressure on Friday, down a little over 1%. Really the only thing that had any kind of company-specific news. MGM gave some Jersey numbers in particular, gambling numbers, but NVIDIA, the only thing that really was interesting. So let's dive into the charts. Here's the IWM. I said we'd look at it. This is a 5-year weekly chart. And we went nowhere. I think the case could be made that we were in a bear market for 2 years that ended here. That ended right here with COVID. I think that case can be made, right? In which case I think we would be closer to the beginning of a cyclical bull than the end. This is 2,000 stocks. This is the real economy, folks. This is small businesses. This is small caps, right? This is, we have a changing economy, obviously. That's where your fan mag comes into place, but nuts and bolts, boots on the ground, what's happening? I think it's right here, right? And, I've made the case that the economy was slowing, that, 2018, 2019, 2020, the economy was nowhere near as strong as we were being led to believe, right? My copper to gold ratio, all that stuff that I look at, the stuff that allows me to play an economist on TV, even though I'm not one. Well, you notice that stuff is starting to shift. I've showed you the copper to gold ratio last week, right? I said, this is why we're rotating. It was breaking out. Well, here's another data point that, maybe the growth theme is getting, maybe growth is improving globally, right? These great numbers out of China today, by the way. But here's a breakout, right? 1, 2, 3 down, and now up. Breakout for small caps. Kind of interesting. They did not make a new high in 2020. As a matter of fact, in February, pre-COVID, right, they were kind of a divergence. Remember, SPY and Qs made new highs and then fell off a cliff. Small caps did not. I think the case could be made. We were in a 2-year plus bear market. And now we're closer to the beginning of a cyclical bull. Oil still grinding. Energy is basing, right? Like I said, we have to be paying attention to energy here. There's other areas of the market that are more compelling, but we have oil grinding away around the $40 mark. I think if we get over 42, 42.5, we're probably making a beeline to 60. If we break 40, we could be going low 30s. But right now, we're just consolidating above the moving averages, right around the breakout level or the consolidation level. Call it what you want, resistance. I'm more interested in what this means for energy stocks, right? And I'm watching this basing process closely. Take out XLE. Now we know we've seen it better, right? We're at the stage where energy is less bad, right? And then just given how hated the group is, less bad can probably make these things work if it continues. But I think you'd rather wait for signs that the trend is becoming established, right? And because it's so hated and it's been so hated for so long, people aren't going to come rushing to energy. You could probably miss the first 15 to 20% off the bottom in energy and still have a good trade, in my opinion. But I think you have to be paying attention to the fact that the tides look like they're changing here within the energy landscape. So we want to pay attention. I'm not saying dive all in, but I'm saying if you have time, if you're interested, do some reading, find out what's going on here. And then base metals, right? If we're talking about an improving global economy, we would expect to see base metals breaking out. And that's exactly what we're seeing. Big rounded bottom, a little bit of a handle for you cup with handle folks here. RSI shifts to bullish ranges. And relative to the broader commodity complex, we have a breakout and a move higher for base metals. To me, that's an economy play. Welcome back, folks. Take us for a test drive. I'm with you tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.